Welcome to Dezan Shira Associates series of podcasts. My name is Aoife, and with me today is Hannah, Senior Manager of our Corporate Accounting Services team in our Beijing office. Dezan Shira Associates is a specialist foreign direct investment practice providing corporate establishment, business advisory, tax advisory and compliance, accounting, payroll, due diligence and financial review services to multinationals investing in emerging Asia. Since its establishment in 1992, the firm has grown into one of Asia's most versatile full-service consultancies with operational offices across China, Hong Kong, India, Singapore and Vietnam, in addition to alliances in Indonesia, Malaysia, Philippines and Thailand, as well as liaison offices in Italy, Germany and the United States. We'll be discussing how small companies can make the most of the changing foreign exchange rules in China. So Hannah, can you outline SAFE's key reforms to foreign exchange rules for trade in goods since 2012?
Since 2012, foreign exchange rules for trading goods has undergone various reforms. Firstly, a new system has been put in place to check the difference between the goods flow and cash flow. Secondly, it is no longer necessary to provide written verification and write-off sheets for export, nor is it essential to complete on-site verification. Everything can now be done off-site. Also, to make matters simpler, enterprise will now be divided into 3 categories, A, B, and C, and different regulations will apply to each category.
What changes have been made to foreign exchange payments? What documents would I now, as a company importing goods, require?
In many ways, foreign exchange payments have been made a lot easier, and the new regulations, rather than having to provide the import contract, invoice, and customer declaration form for importation, companies now only need to provide one of these documents, and the bank will process the payment for them.
Is there any way of avoiding having to pay import VAT and duties?
Yes, if goods are warehoused in bounded area, for example free trade zones and logistic parks in China, it is not necessary to pay import VAT and duties. However, this only applies to warehousing and light assembling and not for manufacturing.
Could you discuss some of the problems the foreign investor may encounter when selling goods in China due to the foreign exchange control?
If the foreign investor opts to warehousing goods in bounded areas, they may, however, encounter some difficulties. It is often the case that warehouses are small but are very expensive to rent.
When thinking of warehousing goods in bonded areas, what important factors would I need to take into account?
When warehousing goods in bounded areas, the following key factors need to be taken into account: taxation and regulation, operation costs, logistics, as well as different tariff and VAT rates. It should be noted that operation costs differ in different bounded areas and goods should be stored as close to the customer as possible to reduce transportation costs and time. Furthermore, it is important to remember that the duty rate for finished goods is often higher than for parts, and if lots of goods are distributed, it can be quite expensive. Therefore, you might want to consider establishing a Chinese company to handle all distribution in China. Companies should also make inquiries to discover if it is possible to assemble all goods in the same area. Then they wouldn't have to produce goods in one area and then pay for transportation.
If I as an employer want to manufacture in China, what would I need to do and how long would it take?
The simplest way of starting to manufacture goods in China is to establish a manufacturing wholly foreign-owned enterprise or manufacturing WFE. However, it is essential to take into account that this process can take a total of 6 months to 1 year, so you may want to set up a foreign invested commercial enterprise or FICE first and contract the manufacturing to a third party.
Thank you for joining us today, Hannah. Your insight into this topic was very helpful. For further information, please visit our publishing subsidiary Asia Briefing at www.asiabriefing.com. Here you can find news, commentary, magazines, guides, multimedia, and lots more.